Welcome everyone, this is Paul. Today we'll be running through a very quick capitalization rate calculation. The first step is if you are evaluating an income property to determine what the monthly rent is going to be or what it is. Just suppose that someone has brought in a property and it has a lease for $1,200 a month. That is the monthly rent of the property. I'm going to multiply that by 12 months, and that is going to arrive at an annual gross potential income, which is an industry term, gross potential income. The next thing to determine is the expense structure for the income property. If this were a single-family house in a good neighborhood with a relatively good tenant profile, a pretty typical expense structure for that type of property would be 30%. So if we're going to have 30% expenses on this property, we'll be left with 70% of income. So I again will multiply this number times 0.7, and that will give us a net income or net operating income of $10,080. Now that 30% expense structure will include taxes, insurance, repairs to the property, and a vacancy rate. So after we deduct the expense structure of 30%, which by the way does not include debt service, so this has nothing to do with the interest rate you have on your loan, how much you've put down. This is purely a capitalization rate calculation. So at this point, from your net operating income, you are going to divide by what your cap rate is, which is 8% or 0.08. And that would give you the value of the property at a capitalization rate of 8. This is $126,000. So as you can see, the capitalization rate has a dramatic effect on the value of an income property. So in order to demonstrate that, let's go build a very simple spreadsheet. This is a Google Docs spreadsheet. The difference in the value of the same property with a $1,200 a month rent, a 30% expense structure, same NOI, the value of that building, if you were the seller selling a property to a 6-cap investor, would be worth $168,000. Now, probably, if you're an independent investor, you'll be investing more in this range. So I would be willing to pay, as a 9-cap investor, $112,000 for a property that rents for $1,200 a month. So I hope that explains a lot. There's a post on our website, theprivatemarket.com is my blog, 2-minute cap rate valuation. You can read over this. It basically describes the same thing in a little bit more detail that I've just run you through on this video, and I hope you enjoyed it. This is brought to you by Private Market Real Estate.